Hello everyone, today I will talk about Cubic Autowork, a car repair and maintenance business in Kajang, Selangor. It's owned by Encik Dan and offers services like vehicle repairs, spare part, tyres and batteries. For the business structure, the business is a sole proprietorship, meaning Encik Dan makes all the decision. This helps the business to adapt quickly but also means he takes all the responsibility. Why it matters? Small business like this drive innovation and supports the economy of the country. Despite challenges like rising costs, QB Autowork stay resilient and meet customer needs. For the financial analysis, we look at business income, balance sheet and cash flow. This show areas to improve and ways to grow in the future. In the conclusion, QB Autowork is a great example of how small businesses can make a big impact. With some improvement, it has a bright future.
Here we have two problem statements, which is high operating cost and debt and low repayment. The first one is high operating cost. QB Autowork is struggling with high operating costs, which are making it harder to run the business and stay profitable. The second one is debt and low repayment. Debt and low repayment are big challenges for QB Autowork, a car workshop working hard to cover its costs and pay back what it owes.
Financial ratio. QB Autowork financial health from 2021 to 2023 shows some concern. The current ratio, indicating the company's ability to pay short-term debt, fell in 3.00 in 2021 to 1.08 and 1.1 in 2023. This shows that district liquidity. At the same time, the debt ratio shows the portion of asset funded by liabilities rise from 0.4 to 0.83 and the further to 0.86 at the 2023. Despite of this issue, the return of asset, the measure of profitability remained steady at the 20% in 2021 and the 2022, and it increased to 22% in 2023.
The 2021 monthly sales trends show notable fluctuations. January starts slow, but February and March see steady growth, peaking at RM20,000 until 25,000, likely due to increased demand or effective marketing. Sales declined in April, May and June, but recover dramatically in July, possibly due to seasonal or tactical factors. August marks the lowest sales of the year, likely due to seasonal slowdowns or reduced marketing efforts. A gradual recovery follows from September to November. December sees one of the highest sales levels, driven by year-end festivities and holiday shopping. The data highlights strong performances in March, July and December, while August represents a key area for improvement through targeted strategies. Next, the 2022 sales trends reveal significant fluctuations. Sales rose from RM10,000 in January to RM20,000 in February but plunged to RM0 in March, likely due to operational or market challenges. A steady recovery followed, peaking RM25,000 in July, driven by seasonal demand or successful strategies. From July to October, sales declined, hitting a low in October, possibly due to reduced demand or competition. However, November and December saw a strong rebound, ending the year on high, likely due to holiday promotions or seasonal buying. In summary, 2022 showed volatile sales with high in February and July and lows in March and October. The year-end recovery highlights resilience and opportunities for more stable strategies in the future. And lastly, the 2023 sales trend in RM show notable monthly variations. Sales started at RM10,000 in January, dipped to the year's lowest in February, and steadily rose from March to June, peaking at RM20,000. A mid-year decline followed from July to September, with September marking the second half lowest point. Sales rebounded strongly from October, reaching RM25,000 in December, the year's highest. This pattern reflects seasonality with strong sales during festive periods and year-end promotions, and a mid-year slump likely due to reduced consumer activity or external factors. Strategic planning is essential to capitalize on peaks and mitigate mid-year dips.
Commerce size. In 2021, QB Autowork asset comprised 40% current asset and mainly accounts payable 41.60% and the inventory 25% and 60% non-current account asset, primarily workshop equipment and automobiles. It includes 30.33 current liability, half of which are account payable, and 75% non-current liability in long-term loans. Only equity accounted for 60% of total liabilities and equities, within 55% in capital and 44.44% in retailing earning. Commerce size 2022. QB Autowork has 169,000 in asset with a 41.42% in the current asset, including cash, bank, there is accounts payable and battery, and 58.58% in this non-current asset, and then have a workshop equipment and automobile. Liabilities total 140,000 is 82.84% of the asset, showing the high debt realized. Current liability 46.76% including account payable, short-term loans, while the non-current liability 44.38% are mostly a long-term loans, and only equity 39k is a 70.16% of the asset, highly the low and reliance and underfund and the heavy borrowing.
Next, the 2023 common size analysis of Cubic Autowork highlights its financial structure and resource allocation. Current assets account for 41.18% of total assets, with cash 16.88% and bank balances 15.58%, ensuring liquidity. Inventory 19.48% and accounts receivable 15.58%, show reliance on client credit and significant investment in tools. Non-current assets 58.82% reflect the capital-intensive nature of the business, dominated by workshop equipment 63.64% and vehicles 27.28%. Liabilities are split between non-current 58.13% and current 37.43%. Accounts payable 71.43% of current liabilities. Indicate supplier credit reliance, while long-term loans 66.67% of non-current liabilities. Highlight borrowing for asset investments. Owner equities make up just 14.44% of funding, signaling heavy reliance on external funding and associated financial risks.
Our first recommendation is supplier negotiation and diversification. This strategy is to reduce operational costs and address financial challenges through renegotiating supply contracts and diversifying sources option. The targeted timeframe for implementing this strategy is 2 to 4 months. Area which key initiative will include renegotiating existing contracts, exploring bulk purchasing agreements, and conducting in-depth market research to identify cost-effective and reliable supplier. Implementing this strategy requires specific resources. These teams should possess strong negotiation skill and be equipped with a true understanding of the company's cost structure, operational needs, and quality requirements. Tools such as data analytics, third-party market intelligence report, and benchmarking technique can provide the insight needed to make informed decisions. Collaboration between procurement, finance, and inventory management teams will be crucial to align purchasing strategy with storage capacity and sales focus. These issues could disrupt operation, compromise product quality, and affect customer satisfaction, and the company should perform a comprehensive supplier evaluation, including audits, sample testing, and trial orders before entering into agreement. Next is over-reliance on limited supplier. It is essential to maintain a diversified supplier base and identify the supplier for transporting during emergency. Last but not least, developing a contingency plan and building strategies for itself can further enhance supply chain resilience.
Cubic Autowork is facing a significant financial challenge, with its debt ratio rising from 40% in 2021 to 86% in 2023. This heavy reliance on debt increases financial risk and threatens the company's sustainability. The recommendation is debt restructuring. Debt restructuring offers a viable pathway to manage these financial strains by renegotiating the terms of existing debt agreement. The key objectives include: first, reducing monthly payment; second, lowering interest rate; lastly, expanding repayment periods. This measure will improve cash flow, stabilize operations, and reduce the risk of bankruptcy, allowing Cubic Autowork to regain financial flexibility. There are 4 proposed steps. First, conduct a true financial assessment to identify repayment capacities and liabilities. Second, engage a financial advisor skill in debt management to draft a comprehensive restructuring proposal. Third, negotiate transparently with creditors to reach mutually beneficial terms. Lastly, formalize the agreements and implement. Benefit that will be achieved is hands-on liquidity, support operational continuity, and maintain strong creditor relationship. Furthermore, it positions the company for sustainable growth and freeing up resources for strategic investment. However, debt restructuring carries risk. Creditor may reject the proposal, or the process could be temporary, in fact, impact the firm's credit rating. It also demands significant management focus, which may distract from core operations. In conclusion, debt restructuring offers a clear path for Cubic Autowork to stabilize its finances and ensure long-term sustainability. By tackling the issue head-on with transparency and strategic planning, the company can safeguard its future and thrive in a competitive market.
From 2021 to 2023 for the solution that can help the company, which is 1. Work with suppliers to lower costs. 2. Change debt terms to make payment easier. 3. Improve operation to save money and grow. The big lesson is small business need a good planning, good spending, and flexibility to success. For conclusion, Cubic Autowork show how small businesses can overcome challenge with the right step. Thank you.